Hi, it's Barry Dowsett from Myriad Associates. I'm the CEO, and today we're going to focus on R&D tax credits, but in particular we're going to talk about subcontractor costs, an area that's a little bit complex, so I'll try and break that down and simplify this for you. So the first thing to say is, what does qualify for subcontracting activities? The first thing is, there needs to be a contract between the person to carry out R&D activities. So what I'm saying here is that you can't, for example, have staff, that's employment, so that comes under a different category. It could be an agency worker, that would come under what's called externally provided workers. So it's when you're contracting R&D activities to a third party, another person. Now those contractors can be based anywhere in the world. So it could be Ukraine, it could be India, it could be of course the UK, anywhere in the world. Let's not forget, that's very important, and it's something which differentiates the UK scheme from many of the other European schemes. If the contractor that's doing this R&D activity, their invoice value and they're what's called unconnected, I'll talk about connected contractors a bit later, but unconnected subcontractor means that you can only claim 65% of the invoice value. There is that restriction. You're probably asking why. It's in essence, HM Revenue and Customs decided that the invoice from the contractor would have non-qualifying activities. It would have general admin overheads, profit margin, etc. They come up with this standard of 65%. Okay, so as I said, it is subcontracting for an activity. You can't subcontract, or sorry, claim costs related to a service, a provision of a service. We're talking about accounting fees, we're talking about legal fees, we're talking about patent attorney administration fees and drafting up IP agreement. They do not qualify, so it's got to be active-based, not service-based. Okay, so there is different rules from large companies to SMEs. So SMEs, fine, they contract activities, if they connect or unconnect, doesn't matter, they get 65% of that invoice value. With a large company, they cannot claim for subcontracting activity. It is excluded. But subcontracting to a business, a limited company, a PLC, that cannot claim. The SME, though, can claim for those costs. So a large company makes a claim at the same time an SME, because they're undertaking R&D activities for the large company, they can also make a claim as well, but they have to make the claim under the large company scheme, which is known as Research and Development Expenditure Credit Scheme. So, SMEs, fine, they can claim the costs. Large companies can't. Generally, they can't. However, large companies can claim subcontracted activity costs given to a freelance person, individual freelancer, or a university. So non-businesses, absolutely fine, they can include those costs. Not many people actually know that, so there's a bit of a tip there for you. Okay, coming on to individual freelancers. A lot of people ask me this question, can you include them? The answer is yes, you can, providing that they are actively involved in the development activities. So take a software developer, for example, that you've contracted to, providing they're working very closely with the team and they're doing hands-on development work, coding, programming, etc., absolutely fine. But if they're providing a general service, so it could be admin support service, it could be legal, it could be accounting, it could be professional advice, the answer is no, you can't. It's got to be actively involved, not just a provision of a service. That's very, very important. And the last area, which is a very complex area, is connected party rules. So this is where a contractor is either a part of your group, so it's a subsidiary, for example, or there is common control. So it may be a major shareholder has control of another entity. Then you've got to think about them as being a connected party. So they're associated with the shareholders or they're associated with the group environment. Control's a very difficult area. We always advise that you reach out to us to ask us about your particular arrangements. As it's complex, we will then try to establish whether it's a connected party or not. But please feel free to reach out. But in terms of connected party, what happens then if they are? You have to do something which is known as the look-through test. So the look-through test simply means that you have to look at that particular, say it's a subsidiary, look at their cost breakdown, and you will only be able to claim the eligible R&D cost, the qualifying R&D cost. So that invoice, and you can't claim more than the invoice value. So let's say you've got a US subsidiary that are invoicing back to the UK. You look at that US subsidiary, you look at the breakdown of that invoice, you'll have staff costs, you'll have staff costs, externally provided workers, consumables. That element of the invoice you can claim. It's called a look-through. Look through to the other businesses' accounts. That's extremely, extremely important. And one thing I will touch on as well, in terms of a connected party, if it's within the EU, then you're able to claim for the social costs. So we call it national insurance, it will be social costs in whatever jurisdiction it is. So social costs are allowed within the costs that you can claim. However, if it's outside the EU, in actual fact it's the EEA, which is a little bit wider than the EU, then you can't claim those social costs. There's a bit of a tip there, so just be a bit careful with knowing where those costs have come from and the geographical location of that development centre. Okay, as I say, it's quite a complex area. Please feel free to reach out. You can contact me on the email that's just up there. Give us a telephone call. Any concerns or questions you have about subcontractor arrangements, particularly the area it's quite complex is control, please get in touch. I hope you enjoyed listening, and I'll see you again real soon. Thank you.